most important videos you've ever seen, as you'll know how to keep more of your money than ever before by the end. If you look for this kind of information online, you'll find information about how to max out your contributions and other things like that. But isn't that not really what you're looking for? Albert Einstein said all that needed to be said. The income tax is the most difficult concept there is. The rich have pricey bookkeeping specialists that assist them with limiting exactly how much cash they make good on in charges. Somewhat recently, we've advanced a considerable amount about the field, and this experience has permitted our organizations and privately invested money to develop at a sped-up rate. Because you never know when you might need this information, write it all down. This isn't monetary exhortation. This is exactly the very thing we've seen the rich use to develop their abundance, and we trust it's important for you to be aware of it as well. The following are 10 different ways rich individuals pay practically zero duties. Number 1, contribute every last bit of it. The wealthy don't sit on cash except if they need it for something explicit. Here is the brilliant rule with regards to covering charges. Profit from reinvested investments is not subject to taxation. Assuming your organization was going to create $5 million in gain, and before the finish of the monetary year, you decide to put those $5 million back into the business to develop it much more, you don't need to pay charges on the $5 million. That is the means by which organizations develop rapidly. Your wealth soars as the company's owner, and you don't have to pay much or any tax. Second item, a company owns everything you use. The second golden rule of tax optimization is, get rid of everything. Listen to this. In the event that a business needs anything to work, the cash you spend isn't available. Do you want to buy a new car for yourself? Indeed, the organization needs the vehicle too, so permit the organization to get it on the organization's dime. And you get to utilize it since you really want it to maintain the business. Rich people take deductions for the following: any kind of innovation, equipment, programming, and so on. Workstations, telephones, contraptions, they're completely required for the business. Traveling for business requires hotels, flights, and utilities like the internet and health insurance premiums. Even eating out is a deductible expense. The more expenses you can deduct, the less money you have to pay taxes on. Number 3. Move to a place where there is little or no tax. People frequently underestimate the significance of moving to a place where you can keep your money. In the past, this was the standard procedure. You would move to Dubai, Monaco, the Cayman Islands, or the Bahamas as your primary home. These nations have no annual duty. They don't expect you to pay any assessment on the cash you're making. Yet, there is a trick. The wealthy have an unfair advantage in life as a result of the high cost of moving there. Monaco's cost of living is also extremely high, but despite everything. Number 4, send it abroad. This is the manner by which Facebook, Google, and Apple do it. They set up organizations in Ireland in light of its expense-accommodating climate. These organizations own protected innovation. The U.S. organization necessitates to pay a permitting expense to Ireland organization consistently to continue creating and selling items in the U.S. The U.S. company was able to deduct this as a legitimate expense. Through this plan, they're removing cash from the U.S. economy and moving it to Ireland, where they wind up paying just 1% or even less, with significantly more enhancement. If you live in a country with low income taxes, you can set up a local business there and bill your U.S. subsidiary for services provided, reducing your U.S. tax burden. Organizations like these tech Goliaths would prefer to cover a fine than settle their expenses. The more you consider it, the more you understand. A fine is an expense for accomplishing something wrong. A tax is a penalty for doing the right thing. Figure 5. Altruistic gifts. Fifth rule of assessments. Cash gave to noble cause isn't available. Therefore, every rich individual possesses a groundwork of sorts. With all due respect, the state has consistently shown to be an unfortunate director of cash. So rather than giving it the cash to do with it however it sees fit, good utilizing a magnanimous establishment to bring in certain your cash really emphatically affects your local area. Where things get intriguing is that even these non-available establishments have deductible costs. They need things to work. you can still make a charitable contribution by donating land, vehicles, or other assets to a charity that you own. Likewise, as the top of the cause bunch, you can in any case utilize the very vehicle that you gave on paper. Number 6. Rather than a compensation, they accept value. As Sovereign Bay put it, pay me in value. This is done for two reasons. Equity may appreciate over time. Unless you sell it, equity is not taxable. This is the manner by which Elon Musk got so rich so rapidly. In all honesty, Elon's yearly compensation is somewhere in the range of $0 and $23,000. That's right, that is the number of dollars Elon that acquires each year for his job as chief of Tesla. Elon, on the other hand, receives brand new stock based on the company's performance. With Tesla being a public organization, his total assets is soaring, and going on like this, it's inevitable until he probably will turn into the most extravagant man on the planet. Number 7. Purchasing artwork. Here's something just the rich know. The craftsmanship exchange is the last major unregulated market. If you've been following along, you should be aware that a good portion of expenses can be deductible. When you buy art, it counts as an expense. Be that as it may, as the rich know, there are layers to this. Imagine that this year you earn $1 million and decide to spend it all on a $1 million painting. Since the cost matches the pay, there's zero cash left to be burdened. 3 years go by, and presently a similar work of art you own is valued at $6 million, or possibly that is what an expert appraiser says. Rather than selling it for benefit, you choose to give it to a gallery, or even better, to your specialty establishment. This indicates that you have just won a $6 million tax deduction. You just saved an additional $5 million in non-taxable income, assuming you still earn $1 million annually. What's more, that is all lawful. You might go for one more round assuming that you needed to. Suppose you choose to sell the canvas at the $6 million valuation, procuring you $5 million in benefit on that bargain, which ordinarily ought to be burdened, right? Once more, the super rich are helped by the government. You are not required to pay any taxes on the profit you have made from the sale if you use all $6 million you earned from the sale to purchase additional artwork. Number 8. Different identities with no decent home. This is presumably the shadiest and most befuddling one on the rundown. However, individuals have done this effectively wherever all over the planet. With regards to settling charges, you should pay charges in your nation of home, your nation of origin. However, what happens when you no longer have a country of origin? Despite owning properties all over the world, many extremely wealthy individuals do not have a home country. When institutions request proof of address, they provide one from a property they own in Thailand or Bhutan that is written in a different language and ignored by a government that has no plans to provide any additional information. Then, at that point, there are the people that purchase an enormous yacht and use it as their essential home. Number 9. Gift cash away. Did you realize you can gift things to individuals and the gift is non-available? Insane, right? There is a $15,000 cap on the gift though. On the off chance that the gift is worth not exactly the $15K, you don't need to inform the IRS as it considers a non-available occasion. You could think, cool, yet this is a video about truly rich individuals and how they improve to make the most out of it. $15 scarcely gets you into the Rolex game, gift-wise. $15,000 could now seem like a great deal, yet there's more space to move in. Starting around 2021, the lifetime gift exception is covered at $11.7 million in the US, insofar as each gift is under $15K. $11.7 million in tax-exempt abundance means a damn parcel of Rolex watches. Number 10. Hold it in protection coins. Crypto is changing the game as far as abundance moves and abundance security. It is amazing that you can carry $1 billion on a stick, pocket it, and fly to Singapore with it. With any semblance of Bitcoin and Ethereum, which are vigorously regulated, measures are set up to give straightforwardness, interface wallets to people, and ensure everybody is paying their reasonable portion. Also, profits from selling cryptocurrencies are only taxed at 10% in most countries, so they still offer a better return than some other assets when you take into account how much the industry has appreciated in value. It is designed to assist you in getting started with cryptocurrency as quickly as possible, and if you use the at checkout, you can save 25%. Bitcoin is perfectly legal and will continue to exist. In any case, there's something else to it. The ascent of blockchains have given way to another variety of innovative monetary forms called security coins.